Hello, everyone. This is the midterm review for chapters 1, 2, 3, 5, and 6. I've put together a few slides to kind of give you guys a guideline to study in order to take the midterm. And also at the end of these slides, there's about 11 to 12 slides. After these slides, we'll do a few examples based on questions you may find in the midterm. All right, so the midterm covers chapters 1, 2, 3, 5, and 6. We'll go first through chapter 1. In chapter 1, this is, again, concepts. I won't spend much time on the concept part. It's your job to read the chapters and to go through the PowerPoint slides and make sure that you retain that information. Mostly what I'm looking for is the difference between corporate finance and the financial manager. What types of questions the corporate finance is there to ask, what is corporate finance, and what role does the financial manager play in corporate finance. Another part of chapter 1 that's very important is the forms of business organizations that you may have, and last but not least, the goal of financial management. So corporate finance asks some of very important questions. What long-term investment should the firm take on? Where will these investments come from? All right, so investment can come in form of long-term financing, debt, or in the form of equity, meaning that the owners of the company will put money into the business. Okay, and also the last question is, how will we manage the everyday financial activities of the firm? Who are the most important players when it comes to managing the daily cash of the firm? So the financial manager tries to answer some of these questions, right? All the questions that we saw in the previous slide. The top financial manager within the firm is usually the CFO, the Chief Financial Officer. He oversees the treasurer, who's in charge of managing the cash. Also, he oversees the controller, who manages the taxes, the cost, and other financial reporting and accounting needed to manage the money within the firm. You got to know the difference between capital budgeting, capital structure, working capital management. Here, the most important concept here is the capital structure. And remember, the capital structure tells you how much debt versus how much equity does the business have. Two ways of raising money in the business. You can raise money in the form of debt, or you can raise the money in the form of equity. The debt, mostly you'll get it from the bank. The equity, mostly you'll get it from the owners of the company. And when you find out the percentage of debt versus the percentage of equity, this tells you what the capital structure of the company is. All right, remember that. Here, for the forms of business organization, there are three major forms in the U.S. There's the sole proprietorship, the partnership, and the corporation. Again, I'm not going to spend much time on these. Make sure you know the difference between these three forms of organization, forms of business organization within the U.S. Chapter 2. Chapter 2, part 3 concepts that were very important in chapter 2 was the balance sheet, the income statement, and the cash flow statement. Of course, the balance sheet, the most important equation of the balance sheet is that your asset always equals to your liability plus equity. On your income statements, sales minus expenses equals to your net income. In your cash flow statement, there's a very important video that I've posted in the cash flow statement, on the cash flow statement. Actually, there are two videos on the cash flow statement. Please take some time to review those. We'll have some examples at the end of the slideshow to give you kind of understanding of the type of questions I will ask from the balance sheet and or from the income statement, also from the cash flow statement. This is kind of a very important slide here. Again, I've said that many times in my recordings. My goal is not to make you memorize any of these formulas. It's more important to me that you know exactly where to get the information from, what income statement you will have to go to in order to find these informations. However, if I were you, I would write down all these formulas on my formula sheet. That way you have them handy. For instance, if I ask you to calculate the operating cash flow, operating cash flow, you will have to find the earning before interest and tax, which is found in the income statement. You have to find out what your depreciation is, what your taxes are. So if you do EBIT plus your depreciation minus the tax, that will give you operating cash flow. All right, so this is a very important slide. That's why I put it here. It's table 2.6 in your chapter 2 PowerPoint slideshows. Please make sure that you're either familiar with these formulas, you can memorize them. If you don't want to memorize them, like I said, it's not needed to memorize formulas, because in all my exams and quizzes, you're allowed to bring your formula sheet with you. No notes, only formulas. Chapter 3, again, chapter 3 goes back to the cash flow and financial statements. It gives you a closer look at the cash flow statement. There's a very important video on chapter 3 here. Please take time to review it. It's about cash flow statement. We spoke about standardized financial statements. These are your common size financial statement, where for the balance sheet, everything is a percentage of your total asset. And on the income statement, everything is a percentage of your total sales. Okay. For ratio analysis, this I won't go much in depth because you have in chapter 3 you have all the formulas for your ratios. Please make sure to write them on your formula sheet. That way, if I give you an income statement or a balance sheet and I ask you to calculate the quick ratio, you will have to go to your formula sheet, look it up, and then go back to your financial statement, compute it, and then click on the right answer. DuPont identity, we'll do some work on that. I have a couple examples on the DuPont identity, and that chart is very helpful. If you have it with you during the exam, it will help you find there are two main ratios that we'll calculate using the DuPont identity. They are your return on equity and your return on asset. So depending on the information that I give you, along with the DuPont identity chart, you will be able to compute either the return on equity or the return on asset. And of course, you'll have to know how to use financial statement information, meaning that if you have an income statement and a balance sheet, and I ask you to compute any ratio or using the DuPont to calculate the return on equity or return on asset, you should be able to do that. That's simply what that last point on this slide tells you. Again, this is the DuPont chart. Like I was saying, this is your return on equity at the very top. You have your return on asset here. In order to find your return on equity, if you're given the return on asset and you're given the equity multiplier, all you have to do is return on asset times equity multiplier. That will give you the return on equity. Again, if you're given the profit margin and you're given the total asset turnover and you're trying to calculate the return on asset, see, you got to follow the line. That's how easy it is to follow this chart. To find the return on asset, you do profit margin times multiplied by times your total asset turnover. Now, if you have the profit margin, you have the sales, and you have the total asset, well, you can find the total asset turnover in order to find the return on asset. So if the question is asking you to find the return on asset, you're given the profit margin, you're given the sales, you're given total asset, well, you'll have to find the total asset turnover, right? By doing sales divided by total asset, you'll get the total asset turnover multiplied by the profit margin, then you get the return on asset. So what I'm trying to say on this chart is, depending on what information you're given, right? Depending on what information you're given, you'll always be able to find return on asset or return on equity depending on what's asked. All you have to do is follow the chart. So if you're given return on asset, you're given equity multiplier, and you're asked to find the return on equity, well, this is what the chart says. Return on asset times equity multiplier, that gives you a return on equity. If you're asked to find the return on asset, you're given the profit margin, you're given sales, and you're given total asset. Well, you know that return on asset is profit margin times total asset turnover, right? Follow the chart. And you know that you have sales and you have total asset. Well, in order to find your total asset turn, right, you do sales divided by total asset, which will give you a total asset turn. Profit margin times total asset turn gives you your return on asset. So all you have to do here is follow the chart depending on what piece of information is given to you, and then you'll be able to calculate either return on asset or return on equity. And the signs are given here: multiplied by, that's a multiplication; multiplied by, divide by, that's a division. Sorry, I got excited. Division. Okay, so we'll do one or two examples on the DuPont identity, and you'll be able to see exactly how easy it is. Chapter 5, this is future value and compounding, present value and compounding. The formulas that are very important for this chapter. Here it is, table 5.4. I've mentioned it before. If you can have this table on your formula sheet, you'll be able to compute all the questions coming from chapter 5. Again, chapter 6 is a continuity of chapter 5. Okay, the only difference here is if it's a series of identical cash flows, you will calculate an annuity. And if it's a perpetuity, it's the same cash flow forever. Therefore, this is the formula. All right, so this is annuity, future value of an annuity, present value of an annuity, and these are the formulas. I'm not going to spend much time on this because you're supposed to, like I said, you can have your formula sheet in front of you when you compute these examples. All right, so this is the end of the PowerPoint slide. I think it will be best to go right into some problems. That way we can become familiar with what's going to be on the exam and the verbiage. That way we will feel comfortable taking that exam. All right, so let's say that LI Corp, first example, will take care of information in financial statements. So we'll call that chapter 2 example, okay? And it has to do with financial statements. Pay attention. These will come on your exam. Let's say that LIC Corp, okay, has operating cash flow of 50,000. Okay, they have depreciation of 6,000. They have interest paid, that's interest paid on the long-term debt, of 2,000. They've paid principal, right? Principal is the amount you pay on the long-term debt. Again, let's say your principal, you've paid 1,500, okay? In fixed asset, right, which is your PP&E, you've spent about 30,000. And then your net working capital is about $1,000. Now the question is, what is the cash flow to stockholders? Okay, that's your question. Now, you know that in order to find the cash flow to stockholders, you're going to have to find the cash flow from asset minus the cash flow from creditors. That's what the formula says, okay? So how do you find, first of all, you're going to have to find the cash flow from assets. Okay, once you find the cash flow from assets, you'll have to find the cash flow to creditors. Okay, and then at the end, you'll be able to find the cash flow to stockholders. Okay, you'll be able to find the cash flow to stockholders. So give me a second. Let me get my notes in front of me. This is fairly simple. Cash flow from asset is simply your operating cash flow, okay? Operating cash flow minus, it says that your net working capital decreased. Sorry, I should have said that. Your net working capital decreased by 1,000. So it's minus your net working capital, okay? minus the amount of money you spent in your PP&E, in your fixed asset. Okay, that's the formula for cash flow from assets. So let's put some number in here. Let me see, draw. I'll change the color. We'll go green. So your operating cash flow is 50,000. Minus in a minus, that's a plus 1,000. Your fixed asset was 24,000. Okay, so if you add all of that, it gives you 51,000 minus 24,000 equals 27,000. We'll do it again. 51, 1, 2, 3 minus 24, 1, 2, 3 equals your 27,000. All right. Now, cash flow to creditors is simply the amount of money paid, the amount of interest paid, minus the amount paid in principal. The reason why it's a minus, there's cash going out. So your interest paid is 2,000. Minus is a plus, 1,500. That's your $3,500. Cash flow to stockholders is simply your cash flow from asset, the 27,000, minus your creditors, so 27,000 minus your 3,500. This will give you the cash flow to stockholders. And this is $23,500. All right. So this is how you calculate. Your cash flow to stockholders. Okay. Next few examples will be on another video, because I have to pause this video after a couple minutes. I will upload the rest on a different video.